Youssef, I guess, these days companies have to be busy signing 20-year nuclear power deals. Like, I don't think anyone had that on their bingo cards 5 years ago.
No. And just kind of to add to what Pippa has been talking about, access to nuclear power, just access to power in general is becoming really a competitive advantage. And so for Meta to be able to lock in 20 years of nuclear power from Constellation, I think is really, really important. We see it as certainly a competitive advantage and something that from a P&L standpoint has already been accounted for, or is already being accounted for with the way CapEx and OpEx has been growing. Now, this is not going to hit until 2027, so no impact right now. But I think the strategic importance of it cannot be underestimated.
Yeah, and I think it's also smart, frankly, from a PR point of view. There in my local paper, they had an article the other day about protecting consumers as data, and this is in New Jersey. I don't even know if we have data centers, but they're saying as data center usage grows, they're trying to make sure that that doesn't drive up bills for customers. So I would think with big tech, and all the antitrust scrutiny, the last thing they need is people blaming them for higher power costs.
No, I think that's fair. I think I think New Jersey in particular, your state, is seeing, just based on what I've been hearing as well, pretty dramatic increase in your electric bill. So anyway, I think we're here to talk about Google as well, or Alphabet.
Indeed. And maybe, as we all pivot towards robo-taxis, we have to worry less and less about our energy costs over time. But I know you're saying that is like the Waymo business, and we had a flurry of headlines about Tesla that were better than expected earlier today. You think Waymo is increasingly showing itself to be an incredibly valuable part of Alphabet, right?
100%. I think today at $165, $170, I think Waymo is being carried effectively at no value. Even though the last round, I think it was Series C that was done in late last year, it was done at about $45 billion. And that was before the company has announced that they were doing 250,000 rides a week. We think that's exponentially going to grow over the next 12 to 18 months as they roll out new markets, as they partner with Uber, as they partner with Toyota, et cetera. So we think Waymo within the next 3 to 5 years should be in hundreds of markets, generating over $10 billion in revenues, and enjoying valuation well north of $100 billion, which again is like over $10 per share. Wow. Not reflected in the in Google stock today.
You think at 169, which is whereabouts where we are, the various pieces on their own would add up to a business worth about 200 to 210 a share. So that's a pretty big discount.
Exactly. I mean, the caveat is obviously what happens to search, right? Because today, search, by our estimate, account for about $125, about $169. And the bears will tell you that with the onslaught of ChatGPT, Perplexity, et cetera, Google is bound to lose share, and that's going to eat into the value of search. Our contention is just like what we've seen in 2012 with the advent of mobile. It had an expanding effect on the TAM, or the total addressable market of search. And I think AI or LLM-driven search is definitely also going to be expanding the overall TAM for search way beyond what's being baked in today. So even if Google goes from 92% market shares to 85 or 80% market share, which is conceivable, I think that the overall pie is going to grow, and the pricing of these search results is definitely going to go up because their value to the advertisers is going to go up.